Hey guys, how you doing? This is Renzo again with another tutorial video on things about the stock market. Okay, so previously we talked about what the stock market was, the different types of indices, and how to look for stocks that belong to the S&P, the Dow Jones, and also the Nasdaq. And we also talked on the other video, we also talked about some of the terms and definitions that we use in the stock market. So today we're going to talk about candlesticks. Okay, so candlesticks is this bars or these bars that you see here in front of you on your screen. This is my Thinkorswim platform, and this is where I make my my entries and my exits. Okay, so what is a candlestick? A candlestick, the actual name of this is Japanese candlesticks. Okay, so we don't need to get into history, but just know that these are called Japanese candlesticks or just candlesticks. So these candlesticks, they measure or represent the price action for a specific time frame. Okay, let me say that again. They represent the price action for a specific time frame. So right now, here we have the 1 minute. That means that each one of these candlesticks represents the price action for 1 minute. Okay, if we go to the, let's say, 15 minutes, okay, each one of these candlesticks, why is this not wanting to open? Let's see if we do it this way. Okay, each one of these candlesticks represents the time frame for a full 15 minutes. Okay, so now let me show you something. We have different time frames, which can allow us to know whether or not we want to go into a short trade, into a long trade, and we need to understand how to read these candlesticks. So we're going to go back to the 1 minute to make it easier. Okay, I don't know why my tool thingy here on Thinkorswim is not allowing me to expand it that way, but no worries, we're going to do it this way. All right, we're going to zoom in right here. So how do we read a candlestick? Candlesticks that are green, that means, let me make this bigger. Okay, candlesticks that are green, okay, like this one right here, that means that the price opened here at the bottom and it closed here at the top. Okay, so again, green candlesticks, price open here at the bottom, right, and it closed here at the top. Now let's look at this other green candlestick. Why does it look like it only has the top and the rest of the body is gone? Okay, so this means that the price opened here at the bottom, it went all the way to the top, right, and then it came back. Okay, it came back and it came back up and it closed right over here. So this was a whole full 1 minute of buying pressure. This was not. Now this one right here means that the price opened here at the bottom, it went all the way to the top, it came back down, and then it settled in the middle. Okay, so all I need you to understand right now is this: green candlesticks, the price opens at the bottom, it closes at the top. This one right here that looks like a plus sign with the fat middle right here is called a doji candlestick, and it represents indecision in the market. So you have this doji, you have this doji. What does indecision mean? Indecision means that the buyers and the sellers are battling here, are fighting here at this zone, at this area, to see if they want to push the price up or they're going to push the price down. In other words, remember from our previous video, the bulls are trying to push the trend to be bullish, and the bears are selling, trying to push the price down. So they're selling against the bulls. The bears are betting against the bulls. In this case, the bulls won this right here, and they continue to push the price higher. Okay, Now let's look at a red candlestick. A candlestick that is red, like this one, means that the price opened up high and it went down. Okay, so if you look at this one, it has a little bit of a tail right here at the bottom, and because these are candlesticks, those little tails are called wicks. Okay, just like in a candlestick. So this means that the price opened high, it went down all the way, and then it retraced and it closed at this point. Okay, now same thing with this one. Just like the other ones, like the green ones, like we saw before, this is the opposite. The price opened high, it went all the way down, and then it retraced, but it closed here. Okay, and this candle is considered to be a red candle because it did not close, it did not open low, it opened high. So what I want you to take away from this is this. Green candles, the price is going up. Red candles, the price is going up, it's going down. Green candles, the price opens at the bottom and closes at the top. Okay, so let's look at this one, this funky looking candle. That means that the price opened low, it went all the way up, and then it went all the way down, and then it closed right here in the middle. This other candle, it opened low, it went all the way up, it went all the way down until here, and it closed right there. This candle, it opened low, it went all the way up, but then it retraced all the way down. This red candle, it opened high right here, okay, and then it went all the way down, and then it closed right over here. Okay, this plus sign is called a doji, indecision in the market. So let's look at a good example of indecision in the market. Okay, let's look at this red candle right here. Red candle, open high and close low. So this was going down. Then we come here to this level and we have this plus sign. This is a doji, okay? So right here is telling us, okay, so the bulls want to push the price higher, but we don't know yet because we don't have confirmation. We're going to learn about confirmation later. Don't worry about it. And then the next candle opens high and it closes low, and we still don't know which way it wants to go. Then we have another kind of doji right here where we're saying, okay, which way is this going to go? And then price goes up, okay? And then it comes back down for a little bit, and then we have this indecision. Look at this indecision where the price is like, we think it's going up. Look at this indecision. So we know that the price was going down, and it retraced back up, and we might think it's going to continue to go up or it's going to continue to go down. We don't know yet. So now we have this indecision right here. Right here, the buyers and the sellers are saying, okay, who's going to win this fight? And look at this, 2-3 minutes later, boom, the bears push the price down. Remember, bearish means going down, bullish means going up. So we have indecision, then we have 1, 2, and then the bears push the price down, and then we go here. This area, we have a little bit of indecision because the bulls want to push the price higher, but in this fight, the bears win because they managed to push the price lower a little bit, and then price comes back up. We have another doji, which means indecision, okay, and we don't know if the price is going to go up or down, but since the price went down twice already, it's most likely to go down. But again, hindsight 2020, we know now that the price went down for this 1, 2, 3, 4, 5 minutes. Okay, actually 10 minutes because it stayed right here and then it went back up. Okay, so this is how you read your candlesticks. You need to know whether or not the candlesticks are opening low and closing high, or opening high and closing low. Okay, so this is the 1 minute, but let me show you this. All right, here at the bottom, this is the QQQ. Okay, so that's the ETF that follows the NASDAQ. We have the 1 minute. That's the chart I just showed you right over here. But if you look here at the bottom has the same QQQ, but this is the 1 hour. So this is two different time frames. So for this whole hour of action, you're gonna get one candle. Okay, and why am I showing you these two different time frames? It's because depending on your trading strategy, on your trading style, you might want to wait for big moves or low or higher time frames to make you entries, because the 1 minute, the 2 minutes, the 5 minute chart moves too fast. If you see here, is up and down and up and down and up and down and up and down, but here it's just one. So if we look at this one candle right here at the bottom left, okay, we see that we have a doji. For the first hour of the day, we had a doji, and then the price comes down. Now we know that the price came down, and we have another doji. So we're thinking, okay, is the price going up or is the price going down? We don't know yet. And then the price comes back down one more time, but it's still a doji. That means that every time the price was going down, the bulls were trying to push it higher and higher. And look what happens right here at 12 p.m. Okay, between 12 p.m. we start reversing a little bit. Okay, because we have one doji, two dojis, three dojis, and then we start reversing. But we also reverse at this level. This is called a support zone. You're going to learn about that during technical analysis. Right now, I just want you to concentrate on this. Okay, why is this important? Because you need to know, is the price opening up high or low? If you didn't know how to read these candlesticks and the market open, okay, and you buy shares for just for today to be a day trade, and the price goes down and you lose your money because you didn't know how to read the opening and the close of this candle. So again, red candles, price opens high. Okay, if you see here my cursor, okay, it's linked with the chart at the top and the bottom. So here at the top left, look at where it opens. Okay, QQQ, and here at the bottom, boom, QQQ, and then it goes down for an hour, and then it goes back up a little bit. So that is the price action, goes down for an hour and then it goes back up. So when it goes back up, it forms this, goes from here at the bottom left, it goes from the top to the bottom and it closes right there, and then it goes into another downtrend, and then we start reversing. Okay guys, so these are the Japanese candlesticks. You need to learn the opening and the close of the Japanese candlesticks. They are techniques where you can learn how to actually read and do some math on the candlesticks. Honestly, that to me, that is a lot of work for a couple points, because we're not here to become millionaires in one day. If you have the time, you have the ability to read this in 3 minutes, do some math, determine which way it's going to go, then good for you. But that's not my strategy. Okay, I'm going to show you what I did today. Today, I knew I had a possibility for the market to go down, so I shorted the market. That's another term you need to know. Shorting the market means you're gonna sell shares when the market is going down. Okay, so you can make money both ways, when the market goes up and when the market goes down. In my case, once we were right here, I shorted the market. I think from right here to right here, and that was a quick couple percent, and that's fine because we're here. My strategy is to scalp it, okay? So just to take small profits, but be consistent profits. And then I waited, and then I took it again right here, and now to the way up, and then I got out somewhere over here, it went all the way here, and then I did it again a couple times. It was crazy today. I didn't want to wait because today we didn't know which way the market was going. It could have gone up or down, but overall, the market was down for the most part, so I could have held it all the way, but I took my profits when I take my profits. But I did it 1 time, 2 times, 3 times, and I think I had it again. When did I do? I did it right over here. From here to here, from here to here, and from here to here. So altogether, I had, I think, 4 or 5 trades. They were small profits, but I ended up with more than enough for the day, at least for my strategy. Okay, so Again, just know what candlesticks are. You don't have to worry about learning how to read the patterns and everything else for the candlesticks. Okay, now let me show you something cool. If you see here, everything is red, green, red, green, red, green, right? So this is what we call noise. So there's a lot of noise because, like I said, every time something goes down, it wants to come back up because you got buyers buying, sellers selling. So it could be confusing sometimes because you don't know if you want to stay in the how long you want to stay in the trade, how long, if it's like 2 minutes, 3 minutes, 5 minutes, it's up to you. So here on thinkorswim, one of the good things about thinkorswim is that you can go here to the style tab here at the top right. Okay, and we're gonna go down to where it says chart type, and right now it's set to candle. But if we go to the Heiken Ashi, okay, it's the 1, 2, 3, fourth one down, Heiken Ashi, watch this. What's up? So now it turns all of the noise is turned off, and it gives you a better or a longer stay in your trade. So right here again, you know, Heiken Ashi, this candle right here, regular candles was green, or this one was green, or maybe this one, but Heiken Ashi stayed red. It stayed red until here. So you could, you know, I could have held this all the way to here, but you know, I decided to get out somewhere over here, and that's fine. That's my style. Same thing over here. You stay with this trade until it turns red, or until you get whatever signal or whatever zone that you set for yourself. But that's how you use the Heiken Ashi. So Heiken Ashi takes an average of all of the movement and eliminates the noise in the market. Let me go back over here so you can see it. Appearance, let me fill up those candlesticks. Okay, now it looks beautiful. So take a look at this. So Heiken Ashis, they eliminate the noise in the market, and it allows you to stay in the trade a little longer. Okay, guys. So let me go back to my regular. Where'd it go? Let me go back to my regular candlesticks so you can see the difference. Look at this right here. It's all red. And when we go back to regular candles, you got some greens right over here. You got some greens right over here. So that could have taken you out of the trade like it did to me. But that was my target. That was exactly my target, and I got out. Okay. So I hope you guys take something away from today's video about candlesticks, and also the Heiken Ashi candlesticks. You can use a Heiken Ashi candlesticks in your trading strategy if you want. You can use regular candlesticks. You know, there is no right or wrong way. Well, there is a wrong way of trading, but there is no right way of trading. So whatever works for you is making your own strategy. Again, like the disclaimer says, it's very risky to trade in the stock market. So before you try to do anything, please, 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 a million times, please, practice in a paper trading account. Okay, and then get better. Practice, practice, practice. Don't lose your money. And then once you have a system down, then you can determine whether or not you want to go in with a small account or a big account. All right, guys. Again, if you have any comments, any suggestions, let me know. Leave me a comment in the comments, and I'll try my best to address those requests. All right. Thank you, and see you later. Bye.